Let's go. New week is here, and what does that mean? It means that we're also back with training session. It's Monday, and I'm gonna check the Forex Factory real quick at first. So how's that looking like? So the whole week, and let's see, we've got all right. Immediately, what I see is CPI. So that's in Thursday. So that should be fine for Monday to trade. Tuesday even fine. Although, FOMC could also kind of cause certain type of price action, which might not be favorable for us. But looking at this week, we got Monday, Tuesday, no news, and then we got heavy news the rest of the week. So definitely shouldn't be a low volume week. We should have proper amount of volume. We just have to avoid certain times. Maybe the morning session at the FOMC, maybe the entire day, considering the fact that CPI is coming the next day, and stuff like that. So, the things to consider there, certainly. All right. All right. So I haven't checked the chart for a couple of days, so I couldn't trade on Friday. Friday was also NFP, but yeah, I couldn't trade that day. I don't really know what I missed on. I didn't even check the chart, so last time I've checked the charts properly was Thursday, so we'll see how market is looking like. So let's start from the daily chart and see what market did. So Friday we had massive drop, like absolutely massive drop, and the main area. Let's look at the quarterly chart. So this is what I want to steer our focus towards, because quarterly chart kind of shows here retracement and push higher, and now we got the Trump tariffs and all that, changes in US economy. They kind of have this type of effect on the short term, at least on the market. So we are definitely bearish currently. So what does that mean for me? It's that all right, we tapped 50% of this price leg. I want a little bit further. We got the fair value gap here. This has to be tapped into, so I will mark that out as an area to go for. Extend that right, and I'm gonna put the 3 month fair value gap. So in 1 month chart, there's really no fair value gap there, but the 3 month fair value gap is really important for me in this time. So 50% level could be also here left marked. Although, yeah, you can see like this very high time frame area, this equilibrium of this price leg up, very high time frame area, and price comes to that area in like 1 minute chart and has like immediate reaction high from that. Like this is what sensitive areas do. All right, and here we come almost to tap that again. But the reason why price kind of trades higher here is because of this new wick opening gaps here. So we can go to new wick opening gaps or weekly chart and see that new wick opening gap here. So I have this indicator that shows just the new wick opening gaps. In this case, it's this one here. We got a lot of gaps up above here, and ICT teaches that if there are multiple gaps in the same area, like congested or something like that, sometimes market likes to deviate towards those areas. But in this case, I wouldn't really try to catch any type of longs. Like we are melting for a reason, and 3 month FVG down here. Although, to be totally transparent, this could be a trap trying to short today, because at the start of the week, Monday, maybe even Tuesday, even if the weekly candle was going to be bearish, due to power 3 during the first couple of days. The price could be putting on a little bit of a manipulation higher, which could look like something like this. Monday, Tuesday price pushing higher, kind of chopping, and maybe Tuesday, maybe sellable hour we see a reversal, or Wednesday putting on the high of the week and putting on a reversal, and then market dropping very violently. That's kind of what we saw actually last week. Because you look at last week's candle, I actually caught a couple of longs in this price like higher. So you would think that you don't want to go short, or sorry, you would think that you don't want to go long because we are so bearish. But I kind of understood that the power 3 is probably going to play out, which for me that meant that I just wanted to catch some longs here, and it kind of worked out. But obviously the highest probability setups are going to work for your favor when you are in shorts. So here I'm tempted to try to see shorts even today, just rejecting this new wick open gap, but we'll really have to think of that. Equal lows here, these are certainly these are like signs to suggest further shorts. So I'm gonna real quick see, there's no SMT at these highs here or anything like that. But yeah, I can now click this indicator off. It doesn't really concern me anymore. But yeah, let's quickly assess the situation a little bit further. So yeah, now when I looked at the monthly time frame, we got these equal lows here. Market sweeps those. Let's actually leave that there for a moment because we can see then market doesn't sweep those in Friday. It rather just gaps below the lows. So basically all the orders that are below these lows are triggered with that gap, and that's kind of nasty. But then market trades back up to the gap we put on sell side liquidity. So this is definitely bearish setup for me. Let's think of a scenario where maybe market maybe puts on like a breaker here where it liquidates this low, then trades above this. This could be a breaker. That could be a different scenario where I would maybe expect a reaction higher from that and maybe liquidate these highs. But to be totally honest, what I would want to see is market rejecting from this low, liquidating these highs, putting on like SMT, and then we could short properly towards the sell side. That would be my ideal for the day. So, but most often you do not see really the type of your basic textbook days or setups. So we kind of have to do what market kind of gives me. But certainly I do have good ideas today. I'm definitely not trying to get into any longs, like zero longs for the day. Even though I do understand that if market doesn't want to melt quite yet, we could actually, like, let's say from this fair value gap, we could actually put on like a proper reaction out of that and actually put on like a big candle. Like market could have range to drive higher and manipulate as much as the market makers want to. Like there is room to drive higher, don't get me wrong. So that's the reason, because we do have room to drive higher, even though the probabilities are that market is going to short, but because there's room to drive higher, I don't just want to hop on any short setup. We need to see a proper evidence behind the trade idea backing the setup. So we'll see. For example, this one, if we get proper inverse 50 minute fair value gap here, that could be really good. So that could be 50 minute IFVG. On top of this, if this becomes IFVG, I'm also looking at, so this is the order block. I'm looking at if the candle could close below the mean threshold, so 50% level of that order block. If that's if the candle is going to close there, the AM session is probably going to drive heavily to the downside. So these are the type of things that I'm kind of interested in now. And we don't even have to look at this as the order block. We could even look at this propulsion block. So propulsion block mean threshold. So if you don't know what propulsion blocks are, it's basically just a order block. But order block is, for example, this one. Then propulsion block is basically an order block inside of an order block. So that's exactly what this is. We leave this area, create an order block, but simultaneously we create another order block. So you could just call this an order block, but I like to call this with their proper names because that kind of tells you more information about this area, why this is maybe even stronger than your regular order block is, because it's inside of the other order block. Alright, so now 9:30 opens. We flip the 50-minute gap exactly. 5-minute candle closes like this. We got the mean threshold here. I would prefer 9:30 now to manipulate higher. Otherwise, if we just leave lower, there's really unfortunately no proper way for me to get in, which would be annoying, but what can you do? Alright, so this is a little bit interesting. So we got open range gap here. So market gap's lower, which could indicate that we would like to see a retracement here, but I'm not gonna lie, I would want to go short here, but I've got, like, in these conditions, I've got trapped multiple times when I try to execute too early at the open, and we have seen, don't get me wrong, like actually decent price action, but sometimes market manipulates heavily before the actual proper price action starts. So for example, last week we got a couple of days where basically every seller, every buyer got liquidated in the lower time frames, and market was just kind of chopping, but it eventually moved very well. But yeah, that's how I got a couple of times. I got liquidated last week with kind of poor executions straight at the open. Some weeks they could have worked, and I was most of the time right with the direction, but it just didn't, like, it just wasn't it. So what I would maybe prefer to do here is wait at least to 950, or at least try to see if we can put on like a first fair value gap here, because market likes to revisit first fair value gaps, which then means that we could catch decent trade from first fair value gap, but we need to see that first fair value gap be presented at first. Yes, similar story. We got this inverse here, 15 minutes. Closure below the propulsion block here. Mean threshold meaning. So that could be a short, but I would want to see a 5-minute fair value gap being created here. Large wick that I like to measure these. Market could like revisit that area and then dump. So we do need to see retracement here. Certainly. Alright, so what's going on now? We traded to the downside a little bit. Market is rejecting from first fair value gap from Sunday, so that's the excuse me, the gap that we created in here, the first one after market opened. So basically, get into that 50-minute chart looks like, and shows how perfectly the bodies are respecting that. We're rejecting higher. I really want to see this 15-minute gap traded into, and we could then start to see a sell-off from that. That's also inside of this open range gap. So really want to see a little bit of a retracement to the open range gap, although I don't really want to see all the way to the this level yet. That could easily kind of happen because we got these equal highs, relative equal highs with these, and even this high here. So there are some reasons to actually drive higher. So we need to keep that in mind. But yeah, well, still not willing to go long. That's definitely the case in here. Trying to see if we could catch any type of shorts. So currently, what's the situation? We haven't still traded into this, so we need to see this 50-minute gap traded into. CP, let's put that. And after, now that that has been done, we can really see if we can reject from here and put on like a, maybe like preferably you would want to see like SMT here. Let's see where ES is. So the high here is 932. So that one, unfortunately, we don't have SMT. Probably, like actually we do kind of now, but right now we don't anymore. So yeah, in this situation, the most important thing to understand is basically that market could easily, like, you could see this as a sell side of the curve and buy side of the curve, and that could be actually decent buy. But I don't want to be necessarily part of that for a couple of reasons. Now, let's say we inverse this 15-minute gap, and market starts to give nice confirmation to actually go for the high. In that case, I will use my discretion whether or not there should be a trade to go long, because I'm willing to maybe, like, if I see absolutely perfect picture perfect setup, I'm probably going to risk like very minor amount. But as of now, I'm very bearish still. But yeah, it's important to understand the fact that, as I told you pre-market, there is a chance that market wants to manipulate Monday, maybe even Tuesday, maybe even Wednesday morning, or at least like have a reversal Wednesday, or things like that. So understanding that that is possible, the manipulation there could be decent long ideas presented in here, and yeah, don't really know if I want to be part of those at the end of the day, though. Yeah, but yeah, definitely if we flip this gap, I'm trying to figure out if I could catch any high quality longs in the silver bullet hour. So that's my plan currently. But yeah, still bearish. Although we're trading above the 50-minute fair value gap, so let's see if we can put on any high quality price action here. I'm monitoring this large area of price here, IFEG. Alright, so open range is now complete. So 10 a.m. opened here, silver bullet, and what did we have? Quite straightforward move higher, no retracements in this price leg. To the upper quadrant of open range gap, or I don't know if we quite reached that, not quite, but it doesn't really matter. We came into that open range gap, and I just want to see if we can have some type of full-on reversal lower. Although, like, even though I want to see the reversal, the thing in here is that, again, I understand we got a breaker like here, 15-minute breaker, and again the fact that Monday, start of the weekly candle could manipulate higher, so that would mean that if it wants to manipulate, there isn't necessarily going to be a great chance to go short today. But definitely, I'm not going to go long here. If the higher time frame suggested that, I would have tried to catch longs from this, definitely having stop like here, and this could have been actually good long because we got equal highs here, and these were very good highs here. So this is actually like shorter time frame. This is like a textbook setup. Due to the higher time frame ideas, I'm not willing to and wasn't willing to execute. So now I'm certainly just waiting to see if market wants to continue higher, in which case I'm just closing the chart. And if it doesn't want to continue higher, it starts giving signs to sell off, because we are now in the so-called hour and we could see a reversal at 10 a.m. This could be like the high of the session here. Like, probably it's not going to be, but this could be. So let's see if we're going to have like a reversal here. And if that is something that market is willing to do, then great. But to be honest, looking at this as a pattern, it doesn't really seem to me that this is going to be a reversal, at least very aggressive, because the 15-minute candle higher is absolutely massive. I do certainly see some problems with trying to catch a reversal here. But I don't know. Let's see if we can maybe like inverse one of these bullish gaps. But yeah, currently we are having bullish breaker here, which is possibly going to cause price to drive higher. So I guess we'll figure it out how price reacts off of this. Alright, we have now hit this 50-minute CB. So really, this is driving way too fast to the upside. Like, what is this? Almost 300 point candle. That's like nasty volume. If you're trading with small account, you are, and let's say you cannot really risk much anyway. Trying to trade with like 1 micro could even be deadly. So, but yeah, we went trade through this 15-minute quite fast here. Let's see if we can reject. And the 15-minute candle is about to close in 3 minutes as well. So, but yeah, definitely because of this move, we are going to reject from here. Like that, I would bet something on the fact that we are going to reject from here, which then makes me think that maybe maybe I should go short from here. There's an order block as well. One hour order block here. Let's make that look like a black here. But yeah, clearly it's going to continue higher here, because I don't know where all this volume is coming from, but we're probably going to liquidate some of these highs here, which is 4-hour high. Let's then mark these out as well. So 4-hour CB, because it's higher time frames area, I like to extend it like this. And I mark these things out, but I'm not going to catch any trade to this area. Like, I don't really care about this area in that sense. But just trying to see, we got equal highs buy side in this here. So I'm gonna mark that equal highs. Alright, well, in a couple of minutes we have moved like 800 points, so this is very wild. I don't see this very often, to be honest, but and you know, the whole reversal starts from the first percentage fair value gap from Sunday, and you can see how the body is respected, and that's kind of cool to see. I'm not going to lie, but it is very great. Like, nah. All right, so right now we're in a situation where, well, basically, I've never seen market move this much during you know, one session, and this is definitely interesting and definitely bullish in this current time due to all of this what we saw. Market, although swept all of the buy side, I could see market, because of this volume mainly, I could see market going further up. But I'm kind of fighting myself here, because I don't really like, because of still the fact that market is still bearish. If market hadn't swept, let's say, that buy side, maybe I could go long, but I just can't get myself to go long. So I can only think of shorts still, which, to be honest, that means for me that I'm not going to execute today, because way too much volume to the upside. But you know, this could be a good sign to go short. Let's see. I do need to check out if this, let's say, is at an SMT. That could be a good sign or favorable thing. And what do you know? It is SMT here. So bearish sign, and you know, yeah, we moved a lot to the upside, but you know, when market moves heavily to the upside, it also is going to move probably heavily to the downside at a certain point. So you know, just trying to see if we can move lower. SMT here, let's put it like that. All right, so now we're starting to melt, but you know, these moves are a little bit too straightforward. Like, how am I going to get into this? We don't build any structure; it just goes higher and then melts immediately lower. So really have to use discretion in here. These are the circumstances where beginners blow their accounts. Oh, what did I do? Oh, so 4-hour chart is putting on like a large wick right now. There's a lot of time to 4-hour close, but hourly close is looking like this. Sorry, let's say hourly closes like this. I would prefer to see retracement maximum to the consequent encroachment of that wick, and then rejection lower. But there's still like 30 minutes to go for that, so who knows where we are at that point in time. But yeah, definitely market is wilding right now, and I'm still, as I said, I'm still considering shorts. Longs are not in my mind currently, mainly due to these type of things like SMT here. The 4-hour CB market swept the buy side here, and we got the equal loss, so I'm going short if the opportunity is presented.